Good morning. Welcome to the XM.com weekly market update, and we're joined by Peter McGuire, the CEO of XM. Pete, good morning.
Good morning, Andrew.
Plenty happening overnight in the last couple of days. So
It sure is. I don't know whether to laugh or cry.
No. We'll start on the local front. Building approvals came out last week. I normally only do a 1 or 2 year chart, but this time I did a 5-year chart.
Yes.
Those building approvals dropped 27%, which is the biggest drop on record, which tells you the RBA's interest rate rises are taking effect.
Certainly impacting developers, and that may be the turn where you've got high costs as far as transferring to a new property, with stamp duty and agents fees. They're looking at just, doing renovations internally to keep, and that keeps tradesmen engaged. But the big picture, if you're looking at, the big unit developments and everything like that across the nation, that's a real telling sign.
Yeah, you'll certainly think it'll slow down.
And that impacts naturally wages, because a lot of guys were doing 7 days a week. I have a son that was in that game, and there was usually a 6 to 7 day week on big projects.
Yes.
And are those projects, obviously, they're not, they're not coming out of the ground.
No, and there's multiple building contractors have gone bust as well.
That's a real other side to it.
Yeah.
Who's holding the debt?
Yeah, that's right. So
it's a little bit like China.
yeah. Once again, a bit of a busy chart here, but this shows us the dwelling values in Australia. So it's you've got to be careful here because each capital city is so different in
100%.
Australia when it comes to real estate. But that gives us the 3-month chart, which basically says across the country, property values are down 2.3%. Right at the bottom there, if we look at Sydney where we are, is down 2.4% over 3 months. But I think more so the chart on the right there, it pretty much shows the top to the bottom. So if it goes back roughly to February 21 where the market peaked, if you like, and it fell roughly 11%, which is a big fall for Australian property.
Yeah, over a 20-month window. If you're looking at that, probably it's hard to make it out, but I'm going to say it's May 21 is the peak, and your bottom there is February 23, so it's a 20-month window approximately, and we've just got to see what happens. Again, is there another leg up from here, or is there another leg down? You mentioned something as far as different cities having different profiles. Well, within a city, you have a different profile. The western suburbs in Sydney versus the eastern suburb, northern versus south, beaches versus city, everything has a different effect, and the ripple effect, I've studied that quite, I find it very intriguing that an area that rolls from Sydney can roll up the coast to the central coast, and then it can hit the mining towns of Cessnock and Curry. It can be a 18-month delayed sort of ripple.
Yeah, but it's hard to sort of, you've got to get the stats obviously, but you've got to really treat them on an individual basis.
Oh, 100%.
Japan, plenty going on in Japan in the next month. The new governor comes in April, so you would yes, unlikely there's going to be any real change in the interest rate policy there in the short term.
No, I agree with you. We've had massive volatility across that yen. It's been a trader's delight, really just explosive and very, very solid moves. When you're looking back over the last year, what we've experienced with the yen, but their wage growth has come off as far as in Japan, but you've still had that uptick as far as inflation. So how they manage that with a very old population base or their median age, it's going to be a fascinating year, 23, for all central bankers, and it's not a job I think any governor would want to be walking into right now.
No.
Mr. Kuroda is probably saying sayonara.
Yes, exactly. So, and speaking of the wages in Japan, we've got the numbers there. The average monthly earnings and real cash earnings have dropped significantly.
Yeah, they sure have.
But as you sort of say, the CPI has been creeping up. So is that peak CPI? Who knows? But if the wages are dropping that much, you would think prices will come down.
You would think so. The Nikkei has been an outstanding performer, the stock market, over the last 2 years. Nothing short of mind-blowing from where it was to where it is. And that other side, as far as the inflation, as you're saying, wages, we've just got to sit through this and see spending power of the Japanese, and naturally, are they going to export their way out, or is it going to be internal demand?
Yeah, so interesting times for the new governor. Bank of Canada kept their rates on hold last week. Pretty flat there. we're looking at the US there as well. We'll touch more on the US shortly as well about where they are heading. But yeah, Bank of Canada is at the peak on their rates.
We'll just have to wait and see. I mean, they might be. One would hope so. If you're a consumer, yes. If you're a deposit holder in a bank, you'd probably be saying, "Oh, I hope they go up further from here." So everyone's got a different viewpoint and a different agenda, but we've just got to wait and see how we move forward. Naturally, with the Fed drops tonight, 12:30 GMT, the CPI read,
Correct.
and let's have a look at the PCE. So that's in Sydney time, about 10:30 PM. Sydney, Tuesday the 14th.
Yes. Non-farm payrolls last week came out at 311,000, which is a solid number again. Obviously less than the previous month, but the previous month was a bit of an outlier.
Showstopper.
Yeah, but still 311, big number.
Very solid. Well, consensus was about 215, so it shot to the upside, and we were very happy with that number. So there's a positive tone. Wages came off in February, so there's another side of it. So there's been a little bit of cooling in the wage growth. And let's see where we roll as far as the CPI, Fed Chair Powell's decisions. That probably impacts Fed Chair Powell's decision that more people are working, which in turn creates again the inflation. But are they prepared to rate hike 25 or 50 or sit on their hands due to the current situation with some of those banks?
Yeah, and we look at now, interestingly, they've got this chart and the next chart. So this is from last week before these three banks effectively folded. So the anticipation there was the market was pricing in above 5% rates for probably 9 to 12 months.
Yes.
We go to the next chart, which is the chart this morning from the blue is the 10-year Treasury and the red is the 2-year Treasury. That 2-year Treasury, on the back of these issues with the banks in the States, that has come off roughly 1%. So that 2-year rate was just over 5%. It is now just over 4%, which is
25. It's a 20% move in, you're saying what, 24 hours?
Yes. So is that overdone? Maybe. Will that sort of correct itself to a certain degree? You would think so, but still.
Yeah, they're massive, and the 10-year got spanked heavily.
So they're now basically saying that the next rate rise, if it does come this month, will probably only be 25 basis points, not the 50 that they were expecting.
Yeah. And you were saying off camera that you're not surprised that as far as the big banks are concerned, they're erring on the side now that you're going to see rate cuts later in the year. So this is one wild year.
Yeah.
We said it at Christmas time. We said 23 is going to be just very dynamic. Well, I tell you what, 10 weeks in, it's beat expectations on that side of it.
And I think what's happened in the last sort of couple of days, obviously no one saw that coming, of course. And it's one of those black swan sort of events.
Well, the regulators didn't see it coming.
No, well, they rarely do. So, but yeah, it's certainly made a big move. But
auditors, risk teams.
Well, that SVB bank apparently didn't have a risk officer, so which is unusual for a bank.
I studied risk management at UNSW postgraduate. I put my hand up for a job. There might be one there.
Well, not anymore, I don't think.
No.
So, but yeah, it's a massive move on the interest rates overnight. Not unexpected considering what we've seen. But yeah, it'll be interesting space to watch. And are there any other flow-on effects from those?
Or the contagion.
Yeah, it is. The Fed has come out there and pretty much got on it quickly and said everything is under control.
Yeah.
So will that stem the bleeding? Maybe.
Well, again, time will tell. Couple of things. First off, you've seen massive push down as far as bonds, as you've just highlighted. Secondly, in 2-year and 10 years. Secondly, you've seen a very solid push down as far as US dollar index, which is really a trader's delight because that US dollar down, all the currencies just go wild. And gold pushed up strongly. It's now 1915. Since, I think, Thursday, we're up $105.
Wow.
So it's a very solid push up.
Yeah. Interesting time. So we'll definitely keep an eye on this bond market over the next week or so as it pretty much feeds into everything else.
Yes, exactly. And we've got that number coming out tonight. So the CPI, and then the other side is Fed Chair Powell making his decision when they're going to whether press no, press go, or press go.
Yeah, we'll see. Interesting couple of weeks.
You bet.
Good stuff. All right, Pete, thanks again.
Lovely to see you, Andrew.
See you next week.
look forward to it.
Great. And that's the xm.com weekly market update.